the bank runs have changed everything with regards to how we manage risk, how we manage cash. Cash is certainly seen as a risk mitigator when you have it to be able to pay bills, but now you have to worry about where to store it and where it's going to be safe. And so it certainly changes the calculus of, how we may operate on a daily basis. Hey everybody, this is Rob Kientz with goldsilverpros.com. I'm recording this on March 17, 2023, Friday, about 11 a.m. Central Time, and I just wanted to do a special report on what's going on, bring you up to date on what's going on in the banks and the effect in the market. It has just been a crazy week. We've had basically the closure of Silicon Valley Bank, Signature Bank. We've had another one almost go out of business, First Republic, and some rescue plans for there. We've had bank runs, not only at the smaller banks, but the bigger ones. We'll get into that. And use of the discount window and volatility is definitely up in markets as we speak. The Dow is down over 1%. S&P, NASDAQ, Russell, all down over 1%. Russell down 2.5%. It is the small cap index. Tends to be more volatile, and generally on bad news, those will fall. Nothing's really doing so hot in the economy. I think people are trying to figure out what to do here. So I'll give you an update. SVB has filed for Chapter 11 bankruptcy in the Southern District of New York to preserve value for stakeholders. SVB said approximately $2.2 billion of liquidity in cash and its interest in SVB Capital and SVB Securities. It also said it has other valuable investment securities, accounts, and other assets for which it's exploring strategic alternatives. The bankrupt entity lists assets and liabilities of up to $10 billion each. SVB Financial also said that SVB Securities, SVB Capital, and other connected entities remain viable and are not included in the Chapter 11 filing. Those entities would continue to operate normally as SVB Financial Group proceeds with its previously announced expiration of strategic alternatives for valuable businesses. So they're trying to spin off the affected parts of SVB, and that's why the Chapter 11, so they can reorg and spin out the parts that have not been affected by depositors removing their deposits from the bank. Again, to recap what happened starting, I think, Wednesday or Thursday of a week and a half ago. Essentially, valuations of treasuries fell so far at SVB that they felt like they needed to raise money. Their assets were not high enough. They tried to raise money. This sparked a panic among investors who had deposits in the bank. Depositors then took out enough deposits to make them cash flow negative, to where they had to go appeal to the government. The government took them over, also took over Signature Bank, which was connected to the cryptocurrency complex, because as a result of the SVB collapse, depositors took out $10 billion in Signature Bank, and then that caused that one to close. Barney Frank of Dodd-Frank fame, who's one of the directors, said he felt as though they closed it too early because it was related to cryptocurrencies and because of the atmosphere here in the United States with regulators towards that part of the economy. He felt that way. He felt like they had more time. In any case, Signature Bank is gone as well. First Republic Bank started to get into trouble as well. It's a smaller bank, but it didn't have the appropriate assets and funding that it needed. 11 big banks pledged $30 billion. This came out yesterday. 11 big banks create $30 billion rescue package for First Republic. I'm reading here on pbs.org. 11 of the biggest banks in the country announced a $30 billion rescue package for First Republic Bank on Thursday in an effort to prevent the California-based bank from becoming the third bank to fail in less than a week. First Republic serves a similar clientele as Silicon Valley Bank, which failed Friday after depositors withdrew $40 billion. It appears that First Republic, which has deposits totaling $176.4 billion as of December 31, was facing a similar crisis. In a statement, the group of banks confirmed that other unnamed banks had seen large amounts of withdrawals in uninsured deposits, which are those that exceed $250,000. First Republic shares dropped more than 60% Monday. And so that was starting to collapse. There's a rumor running around. There's one article that claims that JP Morgan has seen $550 billion in deposits, or maybe that's the wider banking system. I'm trying to get a confirmation for that number. But we've seen at least $550 billion come out of the banking system in the last week. That is an amazing amount, ladies and gentlemen. $550 billion is $500 billion. That's an amazing amount of money to come out of the system. And then we get word that Credit Suisse is in trouble for different reasons. They had their own commercial banking failures and other failures. They tried to get too aggressive into consumer banking and other things that didn't work out. Their bets didn't work out. And so they started to have people withdraw money. They had over a $50 billion guarantee from the national bank there to support them. But even though that's occurring, the run is continuing. You see here, according to the report, Credit Suisse crashes to all-time low after boosting deposit rates to reverse bank run. The second largest Swiss bank was offering 6.5% annual rate on new 3-month deposits of 5 million or above, and as high as 7% for 1-year deposits. Also, they're getting bailed out, but as the news is reporting, Bloomberg's reporting that there's more that's coming out of the bank. Some clients aren't waiting around to find out how the bailout goes. So, for example, in Asia, several ultra-wealthy clients continue to cut back their exposure amid the tumult this week. In the Middle East, some customers asked the bank to convert cash deposits into treasury bills and bonds. An executive at a rival European bank said they're seeing some deposits shifting from Credit Suisse, although the amount isn't sizable yet. But Credit Suisse sees historic levels of client pulling out their money. Let's put this up on the screen. We can show that chart to you. And what does not look like a good week for the bank. You can see the record withdrawals there has been massive. People have been going to FHLB, which was created during the Great Depression to get liquidity. And now they're going to the discount window. So we can see here, according to the Wall Street Journal, borrowing of the discount window and the Federal Home Loan Bank have both spiked after SBV failed. They spiked more than what we saw during the pandemic of 2020. That's how big this is. The next big spike that we see on the chart was during the financial crisis. So this has almost reached financial crisis proportions in terms of additional borrowing done from the Fed by the banking system after we had 2 of the biggest 3 bank failures in U.S. history, as well as had to have First Republic bailed out by other banks to the tune of $30 billion. And they're looking for new buyers for First Republic as well, somebody to try to buy that bank to keep the collapse from going. So a lot of central banks around the world are guaranteeing deposits. Banks are still seeing capital flight, not only the regional banks, but some of the big banks as well. Again, we know at least $550 billion at least has come out of the United States system in terms of cash or conversions of cash to bonds and things like that, short-term debt issuance, what's considered safe debt issuance this week, which has been a tremendous amount. And certainly that changes things for us as well. I've been talking about risk in an article series at jmbullion.com, and I put together a risk chart. I want to show that to you now and show you how I was a little bit wrong here and how it may be a good idea for us to really assess, where we are in terms of risk. I'm going to put this risk back up on the screen. There we go. So this is the risk exercise we had a couple of weeks ago. We were talking about doing a risk-based approach to investing, and we weren't making specific recommendations. We were telling you how to use risk to determine what you wanted to invest in. I had bank run closure here as a low risk each because I thought some of these other things would happen first. I thought we'd see the stock market downturn first. Well, it started last year, but I thought it would go further. I knew high price inflation, interest rates could break the bond system. Loss of job, recession, lack of portfolio growth were key existing risks. But I didn't think we'd get to the bank runs or closures yet. That did surprise me. And it means that we just don't have enough liquidity in the system. So general liquidity, that risk has to go up. So we're going to change these now. I'm going to say the risk probability is very high because we've already had it happen. So this is what we do to our risk chart whenever things happen that change our risk scenarios. We have to change those. So we're going to say this is high risk level if it occurs. Now, hopefully some of you are getting your money out of the banks and are making preparations due to what's recently happened, or you're doing what you think is best. I can't tell you to remove the money from the banks, but definitely our risk picture has changed here. So if we go to our example, and this is just an example, not a recommendation, but an example we used last time, we would now say cash held in the bank account has a high risk exposure from owning because of that bank closure. Risk mitigation while holding is low for sure. I might actually put this very high of holding money in the bank. There's a high risk. Now it does mitigate a lot if you hold cash. So I'm actually going to move this to medium. Holding cash in this environment over the bank would be nice, but you got to get it out of the bank. So we would change this from held in bank account to held outside, right? And so if you're going to have some in the banking account, this may be high. Let's change this to high. Let's say you remove half of it out and half of it in. So you're still a high risk with regards to your money in the banking system. And it is having some money in the banking system does mitigate some risk, some short-term liquidity risk, which apparently having cash may be king for a short period of time. When we're running out of cash before gold and silver and things like that take over. So I might change that there on my risk scenario. Of course, you should do whatever risk scenario you want. This is not a full list of investments or risks. This is just an academic exercise in explaining how we did that. But I wanted to come on and talk about how you would change your risk assumptions when something like this happens. How does it change where you think a risk could happen and how might it actually change um, your potential strategies. You may want to, you know, exit out of this and consider doing something different with your cash. Maybe you want a little bit more cash on hand because you feel as though cash is going to be king there for a while because we're having liquidity issues in the banking system. Maybe you need a little bit more cash than a couple of 3 months. Maybe you need 6 months or 9 months if you feel like cash is still going to hold its value. We're not hitting hyperinflation, but the bank run chance is high. You may want more cash. Now, the risk of holding that, if you hold it to yourself, you would then have to add in, having a liquid asset near you, robbery risk or something along those lines. Um, Robbery, theft, could be an issue. So you could add that in. So this changes if you have to hold cash yourself versus the bank. So this changes the risk of owning and mitigated. But in any case, you would go to your version of this risk spreadsheet that I have, and you would make changes and maybe change the way you do things. And maybe that, we can update that as we go along. But certainly the landscape has changed from what we thought it was going to be before. The bank runs have changed everything with regards to how we manage risk, how we manage cash. Cash is certainly seen as a risk mitigator when you have it to be able to pay bills. But now you have to worry about where to store it and where it's going to be safe. And so that certainly changes the calculus of, how we may operate on a daily basis, how you're going to pay your bills. If you have a business, how you're going to pay your employees, or if not, how you're going to pay your mortgage and your car bills and have liquidity for your kids, for their needs for school and for after school activities and all those types of things. Where do you keep that cash now? Is there a safe place to put it? I would argue that there's a lot less safer places to put it. If you're in the cryptos and Bitcoin right now, maybe you're considering whether that makes sense because your off ramp is going to be to a bank, right? And not only that, but a lot of the banking in the U.S. has been shut down as a result of FTX. You saw Signature get shut down. Barney Frank alleged that was because it was connected to crypto. So maybe the atmosphere in the United States makes it harder for you to get your money out of the crypto system into the banking system. And once you're in the banking system, you still have risk. So maybe crypto is not quite the risk mitigator that people would have thought in this instance. But if you have crypto and you're considering that, maybe it's still okay to you. Maybe that's something that you look at. Gold, silver, I would think would be the most immediate safety outside of cash, having some cash where you can just pay for groceries and gas and things, but having gold and silver where you can convert that over to fiat money if you need it and you don't have to get it through the banking system, that makes gold and silver even more valuable in that case because you've already bought it with fiat dollars. You're out of the banking system. You're now in your own banking system. Hopefully you have that stored someplace safe where it's not a risk somebody come and take it. I don't keep anything at home ever. I have one or two small silver pieces at home for the show. That's it. So, I have mine off in a safe place. I can get to it. I can convert it to cash if I need to within a day, and I've got what I need. So, that the banking system issues do, I think, shine a little bit of a light on the precious metals and say, hey, maybe this is a smarter move to have some, short to intermediate money, maybe in some long-term money to protect against this type of issue, a banking system, crash. If it crashes, maybe we need our precious metals to convert to fiat to pay for things until things settle down. Maybe that's the way that we need to go. We'll have to see what happens, but definitely this has shown a light on all of the problems in the economy. And I think people now are going to start paying more attention to what's going on in the economy. So our weekly market wraps, we're actually going to move forward to producing and putting those out the same day I record. Previously, I recorded Friday and put out on Sunday. We think we're going to just start pumping those out on Friday immediately because the news is going to be so important. And because these bank closure type things tend to happen on Fridays. Friday seems to make the most sense for us to do our weekly market wraps because we don't want you guys sitting all weekend waiting, to see what could be going on with the economy. We're going to report it to you, as soon as we get that information out to you more quickly. So that's a change that we've made. So just stay tuned to Jay and Bullion and the Gold Silver Pros YouTube channels. We'll have that content out once a week. We'll tell you everything that's going on, in the economy in terms of what's underlying the economy and the big stuff. And then we'll talk about the big news as well. And we'll do specials like this, every other week, just to keep you guys updated on what, with some commentary on what's going on, and with some thought on things that you can do. Maybe spreading your risk among multiple bank accounts, or maybe if that doesn't make sense to you because you see them all as a risk, pulling more cash out and maybe focusing on precious metals, but doing it in a safe way where it's not where you're not putting your individual at risk. Maybe, and I can't tell you what to do financially, but just think about the things that you could do. Maybe just make sure at the banks you're with, have good ratings and you feel as though they'll be solvent, but you may look at alternative plans. There are lots of different things to do. Maybe if you're in stocks and cryptos and bonds right now, you're reevaluating how much of those you want to keep because you may need liquidity. So maybe you sell some of those and amp up your cash liquidity, or maybe you feel like you have enough cash and you're already set there. You just things to think about on your own individual risk matrix with regards to your own individual wants and needs. But definitely, this has been a wake up call to everybody. And the banks are backstopping the central banks, the Fed and whatnot are backstopping these small banks right now. But the warning I'll put out is the FDIC is only capitalized with about 1.25% 1.25% of money in their insurance fund to backstop bank failures. So if a couple more of these go out, FDIC may run out of money and we may not have that money to bail people out. So the FDIC scheme was meant to build confidence in the system when it's going well. But if you're having a wide scale potential meltdown or a domino bank to bank run like we started to see last week, the Fed and the other central banks of the world can come in to step to backstop it. But everybody knows when bank runs happen, they happen, and that's a rush of liquidity outside the system, and it can cause it to collapse regardless of what the central banks are doing. So they have to try to save it to maintain this current system. They're going to try to do what they can, but they don't have all the bullets they're going to need in their gun. At some point, we're going to have to rely on ourselves, and that's really what this video is to impress upon you. Is go back if you haven't done that risk-based exercise I wrote about in Jamboing. Go back and read those 3 articles and do that this weekend, please. And just look at your risk. Even if you have a very modest amount of assets, put it on paper and look at your risk. Formally talk about it with your spouse and significant others. Make decisions that are best for you. That may be none, which is good if you're already prepared. If you feel as though you're not quite prepared, maybe you want to make some decisions there and do what's best for your family there. But definitely take the time this weekend to review it. I know we've got March Madness coming up and basketball. And it's a lot of fun. I'll be out watching the games too this weekend, but I'll spend a healthy amount of time looking at my portfolio, just making sure I'm safe, making sure my loved ones around me have done the same thing as well. Maybe just a call to your friends, have a beer, and chat with them just a few moments about it, just to kind of impress upon them, the importance of it so we can all get through this together. And I know we all get through it together because you guys buy bullion, you're watching the channels, and you guys are prepared more than any. Anyway, this is a bit of a special edition here just to talk about an update on where the banking system is, the latest things that have occurred, how the Fed's handling, how the rest of the banks are handling, where the flows are, what the risk is to the system, how it compared to previous crises like the pandemic and like 2008. We showed you that on that chart in terms of showing the deposit flows and also the use of the discount window, the Fed and FHLB, that credit line supporting banks that support the mortgage market dating back to the Great Depression. So we're using really old insurance schemes to keep the system afloat, but those will not keep it afloat forever. So just beware that this system is still kind of teetering on the edge. It could go down at any point in time. Please take whatever precautions that you feel like you need to take to protect yourself. Take some time this weekend to discuss that. And stay tuned to the channel. We're going to continue to provide you reports that we always do on what's going on in the economy and everything around the precious metals as well. Until next time, Rob Kientz with Gold Silver Pros. Have a blessed weekend.